InvestorIdeas.com Podcasts.
Good afternoon and welcome to another episode of InvestorIdeas.com Podcasts. In today's episode, we're going to be looking at early announcements from National Access Cannabis Corporation, trading on the TSX Venture as VIDA, APHA Incorporated, trading on the TSX and the New York Stock Exchange as APHA, Core One Labs Incorporated, trading on the CSE as COOL and the OTCQX as CLABF. Westleaf Incorporated, trading on the TSX Venture as WL and the OTCQB as WSLFF. Delta 9 Cannabis Incorporated, trading on the TSX as DN and the OTCQX as VRNDF. Nanosphere Health Sciences Incorporated, trading on the CSE as NSHS and the OTC as NSHSF. CBD Unlimited Incorporated, trading on the OTC as EDXC, as well as VIDA Holdings Incorporated, trading on the CSE as VIDA and the OTCQX as PHVAF. So starting with National Access Cannabis Corporation, who I've mentioned before, who's a large publicly traded recreational retailer in Canada, who announced its registered Metagrowth as a business name and will begin to conduct business under the Metagrowth name effective immediately, with the formal name change to Metagrowth Corporation subject to shareholder approval. So with the name change, the company also announced that it's entered into a definitive agreement to sell the company's portfolio of medical cannabis clinics from National Access Cannabis Corporation to Evergreen Pacific Insurance Corporation for $4 million in cash, anticipated to close on November 30th. So with the name change and the sale of their medical recreation, Metagrowth is planning on basically positioning themselves to be only focused on the recreational market. Commenting on this, as Canada's largest recreational cannabis retailer with a well-defined growth path ahead of us, this agreement represents Meta's focus on maintaining its leadership position in the Canadian retail market, which we view as the most strategic and valuable portion of the recreational cannabis value chain, said Mark Gallagher. We are proud of Meta's medical cannabis roots, and I would like to thank all the employees who have had a role in growing the division over the past 3 years, and this transaction allows us to monetize a non-core asset and redeploy the proceeds into our primary business unit with a view of optimizing long-term returns on capital and generating shareholder value. So National Access Cannabis Corporation will be changing its name to Metagrowth Corporation once it gets shareholder approval, and now solely focused on the recreational market. This has been somewhat of a problem for the recreational market coming online in the Canadian industry, is not specifically just for National Access Cannabis Corporation, as they're just selling off their medical components, so another person will be taking them over. But in general, the focus on the recreational market has taken a large focus away from the medical market in Canada. Also has severely limited the access for medical patients to get medical cannabis. Almost all of it's online right now, as there aren't actually a lot of medical dispensaries or medical facilities open for that market. And hopefully that'll be changing over the next coming years. But for right now, it is a sort of severe issue where the recreational market, and we've seen this in other sort of developed markets as well, where the rec market can take almost something away from the medical market by establishing itself, as again, it's an easier market to deal with, and there's a larger consumer base that doesn't actually have to get medical approval to buy your products, which makes things a little bit easier. We'll probably might see some of the other Canadian retailers, if they have medical assets, removing them over the next coming months, as again, the focus on the recreational market in Canada right now is sort of prime for any of those retailers, as they have to focus on this, as it's quite an aggressive and competitive market right now. Next, looking at APHA, who announced it's received a cultivation license from Health Canada for APHA Diamond, the company's second Learnington, Ontario cannabis greenhouse facility. So bringing an additional 1,300,000 square feet of production space with an annual grow capacity of 140,000 kilograms. So now combined with the company's APHA 1 facility and its subsidiary Broken Coast Cannabis, the company now has more than 2,400,000 square feet of cultivation space and is capable of reaching a total annualized production capacity of 255,000 kilograms. We are extremely pleased to receive the license for our long-awaited APHA Diamond facility, which more than doubles our Canadian production capacity, said Erwin D. Simon. Reaching industry-leading production levels coinciding with the expansion into new categories and new opportunities for cannabis in Canada and around the world is a transformative moment for APHA Incorporated. So APHA now has reached this massive production scale. There's a few obviously large producers in Canada that also have similar production capacity right now. The Sun Farms facility has over, I think, 1.2 million. And a few facilities have about 1.2 to 1.4 million square feet production space. and a lot of the companies are starting to get up to this 200 plus kilograms of production capacity. We are starting to see this is obviously the focus for the large licensed producers in Canada as well as globally, especially the companies that are focusing on impacting the European market right now. But for, again, some of the smaller licensed producers, they are focusing more so on microcultivator licenses at the moment, as we've seen that unfortunately the cost and the benefit of a lot of these large scale facilities right now for the Canadian market hasn't really been proven, as a lot of the sales aren't really being generated through the retail infrastructure that we currently have. So a lot of these companies, if they are building these massive facilities, are definitely focusing more on international sales, as well as sort of raw processed, unprocessed product sales for other companies to use for extraction or for sort of the derivative products that are coming online in Canada as well as into the US market. Next, looking at Core One Labs, who signed a definitive agreement to acquire Rainy Days Cannabis Corporation, which is a British Columbian corporation. So the corporation's assets include a long-term lease for a facility currently under construction and scheduled to complete it in the second quarter of 2020. And the facility comprises 2,200 square feet of canopy space and 3,500 square feet of operational purpose-built building. Also included are the 15 top proprietary genetics with the necessary farming protocols and SOPs to ensure both maximum yield and compliance. With the acquisition, Core One Labs will be positioned to build a foundation in Canada for national distribution and international export of all cool products, including their cannastrips. So the CEO of Core One Labs, Brad Eckenweller, commented that the estimated revenue numbers for this facility when completed suggested on ROI of over 50% annually. And the guaranteed flower purchase with the growing number of licensed dispensaries is very attractive to the Cool business model for Canada. The location of the facility in British Columbia, where Cool currently has offices, is an additional benefit. And the company will continue to update the market on progress of this project as it proceeds to its completion. So this acquisition or definitive agreement is solely for expansion into the Canadian market for the derivative products. And again, we've seen this for a lot of other competitive companies in the US who have these products already established in the US market and are trying to now move them into the Canadian market for the Cannabis 2.0, which has been discussed a bunch. And this is the general trend most of them have taken so far, which is acquiring or having a partnership with some small asset in Canada to move their products into the Canadian market. As far as the actual cannastrips products, again, I've commented on these a few different times if there's comparison products out on the market from different companies. And so far, again, we haven't seen if there is actually demand for this style or form of cannabis products so far. It'll be interesting to see once most of these, there's a few other products that are going to be coming onto the market in Canada as well as, again, in the US and internationally over the next coming months. Be interesting to see what the actual sales numbers are for them and also what the demand is for that form of product, because so far I've seen not a lot of data on it, and also it tends to be in most of the developed markets that people are moving more towards beverages and other forms of edibles rather than the actual strip products. Next, looking at Westleaf, who announced that the conditions precedent to the white label cannabis derivative product sale agreement between the company's wholly owned subsidiary Westleaf Labs and Delta 9 Cannabis have been completed, and Westleaf Labs has received the first order from Delta 9 for its initial 3-month supply of vape pens and cartridges. So the first order represents an anticipated revenue of $740,000 starting as early as January of 2020. This is another important milestone in the development of Westleaf as we add the critical processing and manufacturing component to our vertically integrated strategy, said Scott Hurd, President and CEO of Westleaf. This operationalizes a key component in the cannabis supply chain and the one that we expect will see increase in demand as we enter Cannabis 2.0 and the legalization of a myriad of new products. So with the sort of vape issues that we were seeing in the US, this is a nice sort of show that in the Canadian market, this really hasn't been affected at all. As with all the Canadian companies, they're highly regulated. They have to go through a series of processing and manufacturing compliance requirements. And again, for the white label products in Canada, we're now just starting to get orders as, again, people prepare for that Cannabis 2.0 supply chain. And Delta 9 already focusing on getting their vape products in there. As well, another company Delta 9 is partnered with for the Cannabis 2.0 is Nanosphere Health Sciences. who provided an update regarding its operations in Canada, along with its Canadian partner Delta 9. So the company announced that Delta 9 has filed a notice of new cannabis product application with Health Canada and will be proceeding to produce commercial batches of an ingestible cannabis oil using nanosphere patented technology. And once produced, the initial commercial batches will require final review and approval by Delta 9 Health Canada prior to being sold under the Delta 9 Evolve brand in the Canadian market. So Delta 9 focusing on the vape market as well as on the edibles market, the nanosphere ingestible cannabis oil. And it's just nice to show that at least for the derivative markets in Canada, it hasn't really been slowed down or affected at all by the sort of misinformation going on in the US with the vape market. And again, it's a very different industry in Canada, as the regulations and requirements for any of these companies to have products on the market are extremely different than what's going on state by state in the US. And as well, most of the vape issues in the States were more for the tobacco industry than actually for the cannabis at all. Next, looking at CBD Unlimited, formerly known as NYSE Corporation, who announced a momentous advances on the company's new partnership with First Foods Group Incorporated, which is a leading chocolate manufacturer, to launch hemp-based premium chocolate product under the line name Southeast Edibles. So through this collaboration, First Foods Group and CBD Unlimited expects the initial launch to promote the continued development of distinctive edibles. CBD products. Southeast Edibles will offer a variety of premium chocolate flavors with different concentrations of CBD, unlimited, top-rated CBD. So we've seen more and more focus on the CBD market, obviously, over the last little while, strictly in the US market. And now we're starting to see the actual edibles come onto the marketplace. A lot of these are strictly through online sales, which leads into the last announcement from VIDA Holdings, who announced the closed beta launch of its e-commerce site, wakala.com, which is an online CBD marketplace for US vendors. It has a few different features that separate it from the other online CBD marketplaces, and right now it's in the beta test, so they'll be able to see what differentiates them and what the demand is right now from both consumers as well as from the vendors, and if there's any issues that need to be addressed. But right now, this is what we're seeing primarily for the CBD industry in the US, is focusing on the edibles market and then also focusing on online e-commerce. There's a few companies who have gotten their products into some pharmacies and into some sort of general product stores, but a lot of those are more focused on the topicals, creams, or on some of the CBD waters. Whereas for the actual chocolates or edibles in that style, there's still not a lot actually in stores, but that'll probably be changing over the next few months. Still waiting to sort of find out how this is all going to be regulated fully in the US. But right now, it seems like a lot of companies will be focusing on some form of e-commerce, and it'll be interesting to see with another e-commerce sites for wakala.com on how they compare to the other e-commerce sites that are out there. There's a lot of CBD marketplaces already out on the market. So it'll be interesting to see how they can sort of develop and separate themselves. That's all for today's podcast. Enjoy the rest of your Monday. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated's CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.